Hey, Claire here from Pitt News Magazine. And welcome back to Pitt News on Air, your favorite place to decode what the market's really up to. So, have you ever heard that old trading line, buy the rumor, sell the news? Well, buckle up, because today's episode takes that idea, shakes it upside down, and asks, what if the news was never the cause at all? We're talking about headline manipulation, algo-driven price moves, and how some of the biggest players on Wall Street are using news as a narrative cover. A clever little story for a move that already happened. I know, it's juicy, and it might make you side-eye your next CNBC alert just a little harder. Jake and Lena are breaking down the myth of the news-driven market and showing you how to think like a strategist, not a headline chaser. Let's get into it.
Ever get that feeling when the market whipsaws and then suddenly the news rushes in to tell you exactly why?
Oh, absolutely.
But it just doesn't quite add up sometimes. Like you're always just one step behind the real story.
Yeah, that sense of being a bit out of sync with the market narrative. I think that's something a lot of people experience. We get these explanations constantly, right?
Right.
But often they feel more like, I don't know, convenient justifications rather than the actual causes.
Right. And that's exactly what we're digging into today. We've got some really thought-provoking stuff here from the latest Pitt News magazine.
Ah, Pitt News. Good stuff.
Yeah, this isn't your typical punditry. They really focus on the nuts and bolts, trading intelligence. And their core idea, it's pretty radical.
Right.
They're saying the news we all consume doesn't actually drive the big market swings.
Okay.
Instead, it just explains them after the fact. It's the cover story, as they put it.
Interesting. So our mission today, really digging into these Pitt News articles, is to try and uncover what's really moving the markets then.
Exactly.
We're going to explore the role of these pretty sophisticated algorithms. You hear about systems like BlackRock's Aladdin, right?
Mm-hmm.
And how these technologies might be using news narratives almost like a shield, a protective layer. I think we're going to have some real aha moments unpacking this.
Okay, so let's get into it. This central idea, the news-driven market might just be, well, a myth.
Right. The conventional wisdom, what most people learned, is that news events, jobs numbers, interest rates, earnings reports, they trigger market reactions.
Yeah, Pitt News gives the classic examples we all know.
Yeah.
Bad jobs numbers, market goes down, Fed raises rates, stocks fall, big tech company kills earnings, market rallies.
It sounds perfectly logical, doesn't it?
It does. It absolutely sounds logical, and that's why this alternative view from Pitt News is so compelling.
So what's the alternative?
We're looking at an article from Pitt News magazine, right? By Lan Turner. He's a longtime trader, 35 years, now editor-in-chief there.
Exactly.
Argues that the market often makes its move first.
First, before the news.
Before the news. The explanation, the story we read or hear, that comes later. And they say there's a pattern to this.
Yeah, it's not just a hunch. The Pitt News analysis points to this recurring thing. You often see a big jump in price and trading volume before any major news actually breaks.
Okay.
Then, boom, the headlines hit, the commentators start talking, and this seemingly clear reason emerges. The article even uses this analogy like a train on rails.
Suggesting it's sort of predetermined.
Kinda, yeah.
Yeah.
It suggests the path was already set.
Yeah.
Which really makes you wonder, doesn't it?
It does. So the central question is the news the real cause or just the justification? Are these algorithms using news as a, what did you call it, a narrative shield?
That's the core question Pitt News is asking. And this idea of news as a narrative cover is really central to their whole analysis.
Because the theory is these advanced algos like Aladdin, they aren't just sitting there waiting for headlines.
Not at all. They're constantly crunching massive amounts of data, they're anticipating sentiment shifts, and they're essentially engineering market moves. The news then just provides the convenient explanation after the fact.
Okay, give me an example. Like those Tuesday morning drops Pitt News mentions.
Exactly. The market drops, and then the headlines pop up. Concerns over economic outlook, maybe weak consumer confidence data, or investors selling off due to inflation fears, maybe geopolitical tensions.
Right. Stuff we hear all the time. They sound plausible.
They do sound plausible. And look, those factors can matter. But the Pitt News angle is, what if that selling pressure was already building? What if the algorithms were already moving?
And the headlines that follow, They're just the most readily available explanation, something to make sense of the drop.
Precisely. It gives everyone a sense of understanding, even if it's not the whole picture.
Which reminds me of that quote they highlighted from Mark Peterson.
Oh, yeah. What everyone else already knows isn't worth knowing.
Exactly. It suggests that by the time something is big news, the real market move, it's probably already happened. Reacting then means you're reacting to the explanation, not the cause.
Makes sense. So Pitt News is saying these algorithms aren't doing fundamental analysis like a human might. They're anticipating how news will hit sentiment.
And positioning themselves based on that.
Right. If some news fits the move they already wanted to make, great, that's the trigger. If it doesn't quite fit, well, it can still be the excuse afterwards.
And the result for, say, retail traders.
Well, as Pitt News points out, it's pretty significant. You get this logical-sounding explanation after the market's already moved.
Giving you this false sense of understanding.
Exactly. You think you know why something happened, but you might just be seeing the narrative they want you to see. It could lead to bad decisions down the line.
Okay, but let's clarify something. Pitt News also stresses they're not saying the media is like in on some grand conspiracy, right?
No, not at all. They're not saying journalists are intentionally lying or trying to deceive people. The point is more about where the information comes from.
Where does it come from, according to them?
Well, the primary sources, Pitt News, identifies them as the big players. Institutional analysts, sell-side research desks at the big banks, hedge fund managers.
And the really big firms like BlackRock.
Critically, yes, BlackRock. And they also mentioned Vanguard and State Street as other big firms using systems like Aladdin. These are the players often driving the moves.
So these institutions kind of control the flow, the language, the timing of when info gets out.
That's the picture Pitt News paints. Imagine. Firm X makes a big move. Then they provide the press with a ready-made narrative explaining it.
And journalists trusting the source, looking for a coherent story, they report it.
Precisely. So the media becomes part of this playbook, as Pitt News calls it, not maliciously, but functionally. They frame the moves in ways that seem reasonable to us, the retail crowd.
Like those examples, stocks surged on Fed comments, or markets fell on global concerns.
Exactly. Plausible explanations.
So, just to hammer the point home, the news isn't leading the charge, it's chasing the move. The algo pulls the trigger.
And the news provides the cover story. By the time you read about it, the smart money might already be moving on.
Okay, this is fascinating. And it gets deeper, right? Because these algorithms, they're not just looking at price.
Not even close. Pitt News highlights how sophisticated they are at analyzing sentiment. They're scanning social media, watching volume spikes at emotional peaks.
Quantifying fear and greed.
Essentially, yes, quantifying it. So those big, scary Panic on Wall Street headlines, Pitt News suggests they might not be just observations. They could actually be fuel for the algorithms. Fear itself becomes an input.
An input? How?
Well, fear makes people sell, right? Especially maybe less experienced investors, what Pitt News calls the weak hands.
Okay, so they sell.
Which creates liquidity. It makes shares available. And if an algorithm wants to build a big position, that selling pressure helps them buy cheaper. This ties into the idea of the float.
Right, the float being the number of shares actually available for trading.
Exactly. If the float is tight, meaning not many shares are readily available, it's hard for a big institution to buy a lot without pushing the price way up.
So Pitt News says if they want to build a big position in a stock with a tight float, what? They might cause a drop.
They might engineer a drop, is the phrase used. Push the price down, let the scary headlines fly, encourage retail folks to sell out of fear.
And increase the available float for the algorithm to scoop up.
You got it. And Pitt News is clear. This isn't personal, it's mechanical. The goal is just acquiring shares. They need your float, they want your shares, as they put it quite bluntly.
Wow. And then what? After the shakeout?
After they've accumulated, the market tends to stabilize. The news turns more positive, the uptrend can resume, and the same thing works in reverse too.
How so?
During big rallies, when everyone's euphoric and the news is all positive, that can be the signal for smart money to start distributing, to sell their shares.
So the algorithms are reading the fear and the greed in the data?
Exactly. And the headlines help amplify those emotions, kind of herding the sheeple, to use a common phrase, in the direction the algorithm needs them to go.
Okay, this is heavy stuff. Does Pitt News give a concrete example of this playing out?
They do, actually. A very recent one. Palantir Technologies, ticker PLTR.
Ah, Palantir. Okay, what happened?
So, context. Leading into their Q1 earnings, the stock was already way up. Pitt News says 64% year-to-date, huge run, Expectations were sky high.
And the earnings themselves.
Absolutely stellar by all accounts.
Huh.
Pick News lays out the numbers. Adjusted EPS met expectations. Revenue shot up 39% year over year, beating estimates. U.S. commercial revenue up 71%. They called it unbelievable.
Wow.
U.S. government revenue up 45%, term jaw-dropping. They have like $5.4 billion in cash. Mind-blowing. And they raised their full-year guidance. Remarkable. Just fantastic numbers.
Okay, so that sounds like news that should send the stock flying higher, right?
You would absolutely think so. But what actually happened, Pitt News points out, PLTR stock fell more than 5% after hours. Fell. Despite those amazing results.
That makes no sense on the surface.
Right. It seems totally counterintuitive. But the why, according to the Pitt News analysis, fits perfectly with what we've been talking about.
Okay, explain.
The big price run-up. That already happened before the earnings. The hype, the positive sentiment, it was likely already priced in.
So the algos use the good news. How?
As a distribution point. An opportunity to sell into the hype, take profits, and maybe trigger a shakeout because, again, Palantir has a relatively tight float. It wasn't a reaction to bad numbers because the numbers were great.
It was, as Pitt News put it, a calculated move to shake the tree and collect the fruit, to get retail investors to sell.
That's the argument. To shake out weaker hands and maybe consolidate positions.
And the headlines afterwards.
Predictably, they tried to make sense of the drop. Pitt News gives examples. Palantir falls despite strong earnings as investors expect more. Or stock dips after earnings beat, future growth priced in.
Explanations after the fact.
Exactly. The Pitt News conclusion is stark. The news didn't cause the drop. The drop seemed pre-planned, maybe algorithmically driven, and the news just provided the cover story.
Okay, so that's a powerful example. How can people listening, start to spot this kind of thing in real time? Does Pitt News offer any clues, any tells?
They do offer a few things to watch for. The first big one is price moving before the headlines.
Like we discussed, see a big price and volume spike with no obvious news.
That's a potential sign. The market might already know something, or a move is being set up.
What else?
Unusual volume and volatility, especially during quiet periods without a clear catalyst. That could be algos getting into position.
Okay.
Also, be wary of sentiment extremes that don't line up with the charts. Like if everyone is super bullish, but the price isn't really confirming it strongly, or vice versa, that could be a trap.
Makes sense. Any patterns?
Yeah, they mentioned watching for repeating patterns, like those Friday dumps, Monday rallies. Often there's a logic there, maybe smart money buying Fridays, panic selling.
Interesting. Okay, so wrapping this up, the main takeaway from Pitt News seems to be flipping the script on news.
Totally. We're told.
Yeah.
Follow the news, it drives the market. Pitt News says, nope, the news is often the cover, not the cause.
It explains the past, not the future. And algorithms are acting through the news, not just reacting to it.
Right. And understanding that, hopefully, lets you stop chasing headlines and start, reading the market itself, paying more attention to price action, to volume.
Those become the primary signals?
They can be, yes. It encourages a more critical eye when you consume financial news. So the next time there's a big, seemingly unexpected market move.
Maybe your first thought isn't what's the headline.
Exactly. Maybe it's, okay, let's read the move itself. Consider the possibility that the news explanation is coming later, crafted after the algo already acted.
So the core insight from this Pitt News deep dive: market moves often come before the news that explains them.
And algorithms are a huge part of that dynamic.
Definitely something to keep in mind as you watch the markets and read the news. Question those immediate explanations. Was the move already underway?
And maybe the big question to ponder after this is, what other market reactions that seem totally obvious on the surface
might actually have these deeper, predetermined roots?
Yeah. Thinking about that, really internalizing this perspective, it could fundamentally shift how you understand what's happening in the markets and maybe how you participate.
Whew. That one made me want to unplug from the news cycle and just stare at a price chart for a while. Big thanks to Jake and Lena for exposing the myth of the news-driven market, and to Lan Turner, our editor-in-chief, for not only writing the original article, but also giving me the green light to turn Pitt News on air into a real podcast. That's right. What started as one of Pitt News Magazine's most popular sections is now a weekly show, bringing you insights, lessons, and a little bit of trading drama every Wednesday. All right, Aiden, be honest. How's the new podcast voice coming along? Am I giving smooth market narrator vibes, or more like finance teacher with a caffeine problem?
I'd say it's a solid mix of both, Claire. You've got the energy, you've got the intel. Now we just need to work on your dramatic pause game.
Dramatic pause game? Please. I've been practicing those since high school theater.
It shows. But seriously, great job today. This episode's gonna make a lot of folks think twice before they chase headlines.
Thanks, Aiden. And to everyone listening, catch you next Wednesday on Pitt News on Air.